Good afternoon. A down day for the Australian share market. At the end of the session, we had the ASX 200 slipping by 30 points, down by about 0.5%, back below 6,000 points at 5,994. So almost enough to erase all of Monday's improvements. And it had a bit to do with the resource sector that came under quite a bit of pressure. We had big falls in commodity prices in general. Oil, for example, was down 1.6%. There's been ongoing speculation that there could be additional supply hitting the market in coming months. Iron ore prices also down about 1.3% on surplus concerns. There's plenty of supply at the moment in Australia. So that will certainly await on all the big names, BHP, Rio and Fortescue included. In the energy space, Origin and Santos were two of the worst. They were down in the order of 2%. Elsewhere, there were certainly more losers than winners across the market, but three stocks that really were hit hard included Kogan.com, Retail Food Group and Mortgage Choice. Starting with Kogan.com, the online retailer down 12.5%. It was briefly in a trading halt this morning, and it then released a statement saying that two of its key executives have indeed been eyeing the sale of some of their shares. There have been some media speculation that could hit as high as $100 million of those equities. Retail Food Group down 2.5%. This is the owner of Gloria Jeans and Donut King. The new CEO essentially warned that underlying profit is going to be down quite substantially this year. In fact, they're expecting underlying profit of $34.5 million. That's about $20 million below what analysts were expecting, so that certainly was a weight. Mortgage Choice, another loser, it was down 21% today. One of the country's biggest mortgage brokers, Media reports today that franchisees have been a little unhappy with with its business model. There were some standouts today. A2 Milk, for example, was up 6%. The fund manager BlackRock snapped up a 5% stake in the company in recent days. And in the software and technology space, WiseTech and Xero, they were both up as much as 4.5%. Now, on the economic front, plenty going on today, but certainly all eyes on the Reserve Bank this afternoon. No surprises. Rates on hold now for 22 consecutive months. We have not seen a rate move at all. It's 1.5%. Muted reaction from investors, but overall, degree of cautiousness in the tone. They did mention the political woes in Europe and also trade tensions between the US and other partners, but overall, no big change. Wages and inflation are quite weak as far as growth goes, and we think rates could very well stay on hold for the rest of the year. The Aussie dollar, 76.3 US.